this trading example on the euro US dollar, the trading setup we were waiting for this week, exactly on the 28th of May, it's a great example on how you can still prepare yourself properly and follow all the trading rules, and you wait for the market to do what you want to see based on your trading plan, and you can still miss the move just because market is doing something else. So we will talk about the psychology and the mindset that's really necessary for you to have it on the long term, especially if you want to be consistently profitable on the long term. So we will dig into this euro US dollar example. We'll start from the hard time frames just for you to understand what we were looking for here. And just by focusing on the daily time frame, we can see that overall here we had the bullish structure, and on the 27th of May we closed bearish. We have this bearish daily candle, and we said that we may see potential retracement, bigger retracement here at least. If not, price maybe want to even move towards this previous swing lows, the sell side liquidity down there. So our idea on the 28th of May, yesterday, was of course to look for potential short trading opportunities, and as long as the 4-hourly time frame is confirming potential continuation and bearish structure within this retracement, then of course this is what we want to look for potential short trading opportunities. So it's really necessary, it's always a must for you to combine daily and 4-hourly time frame first. Now daily was retracing as we said, and if we move forward to the 4-hourly time frame, this is the 4-hourly chart, the structure that was confirming of course the bearish structure. So if the daily time frame is retracing, then of course also the 4-hourly time frame in most cases is moving within the bearish structure. So what we saw on the 4-hourly yesterday was of course this bearish structure. As you can see, we have all those lower low, lower highs, and what we noticed is as we approached the new trading day on the 28th yesterday, we saw that we had this swing high here, price moved to the downside, dropped, created a new swing low. So we had this swing low, we had this swing high, and as the market was retracing, our idea was to look for potential continuation lower. So any retracement towards the bearish 4-hourly imbalance here of course means a potential opportunity to look for potential short trades in order to look for this potential continuation to the downside towards this next sell side liquidity, the previous lows, or even further to the downside. So this was our trading idea. Market retraced beautifully to this bearish 4-hourly imbalance displacement. We had nice retracement into the discount, meaning that if the market, for example, dropped from this area to this area 40, 50 pips something, then of course we want to see at least 50% retracement back, and this is confirming this structure is confirming what we wanted to see in combination with this bearish imbalance. And when the market was here, we were looking for potential shift to the downside on the lower time frames. Now we want to go to the next lower time frame, the 15-minute time frame. So this is the 15-minute time frame. What we did see here at the start of the trading day yesterday, 28th, as you can see, May, we saw this Asian session range here, Asian session low, Asian session high here, and in combination with this 4-hourly imbalance displacement, what we were looking for is I wanted to see potential sweep of those Asian session highs in combination with this 4-hourly imbalance, and then look for potential short trade opportunity to target the Asian session lows, the daily lows down there. So this is what I wanted to see here. This is what I also this was the plan that I sent to my students, and So this Asian session high with 4-hourly high time frames imbalance was great sweet spot of liquidity, and this is what I wanted to see. I wanted to see for liquidity to be taken out of both levels and then potential shift to the downside with 15-minute displacement in order to target the Asian session lows and lows of the day. But what do we see here? What happened here? Market was moving to the upside beautifully, as you can see. We had this beautiful bullish structure on the 15-minute time frame, and what I wanted to see was, of course, liquidity sweep out of both levels and then potential shift to the downside in order to target those lows. But what happened here? The Asian session highs were left untapped. Market just took this short-term liquidity, the previous highs, and then switched to the downside, and we had this confirmed structure shift on the 15-minute time frame with this 15-minute time frame imbalance fair value gap zone, and market just moved lower without us being in this position because we were waiting for this liquidity to be swept and then we wanted to see this setup. So this was just 5 pips, you know, and missing the trades is part of the trading. This is what you need to understand. You need to have this mindset. You need to understand this psychology, because trades are like buses. There is always a new one coming, you know, so don't worry if you are waiting for a setup like this based on your trading plan, and because you missed the move, you know, because the market didn't do what you did want to see based on your trading rules. And that's, you know, where the market is actually testing your patience. It's testing your discipline, whether you are able to stick, you know, to your trading plan consistently. This is what the market is testing you out. And if you're not disciplined, if you're not patient, then of course that means that market will force you to make mistakes. It will force you to make and build, you know, bad trading habits by breaking your trading rules due to the fear of missing out trades like this. So discipline in this case will say wait for the liquidity sweep and wait for the setup later. And if you don't have this discipline and patience, then of course market will force you to break your trading rules and enter on those kind of setups that are not 100% in alignment with your trading plan. And this is what you need to understand. This is what you need to build your trading mindset around. And if this setup will be after, for example, liquidity taken out, and then we will get this setup. This setup is really what we were waiting for. And if this setup would be drawn after liquidity sweep of those Asian highs, then of course trading rules will be simple. Entry on the confirmation of this imbalance of the bearish setup. You will target at least 1-to-1 in terms of risk and reward ratio, those previous lows, or even more if you would look for higher risk and reward ratio. Then of course in this case you'll be looking even for 2-to-1 in terms of risk and reward ratio. Totally depends on your trading plan rules, but that's how it is. Trades are like buses. There is always another one coming, and you have to make sure you stick to your trading rules no matter what, and don't change your trading plan just because you missed some trade here and there, just because market didn't do what you wanted to see based on your trading plan. In this case, there was no liquidity sweep of Asian session highs in combination with this 4-hour higher time frames imbalance, and that's just part of the trading. Market, as I said, is testing your patience, discipline, and if you have the right discipline and mindset, then of course you'll be successful on the long term. And if you're not, if you just break your trading rules from trade to trade, if you're not consistent with your trading process on the long term, then there is no job for you here in the trading world and find another job, because you have to really be harsh to yourself, you know, have this discipline, take responsibility for your own actions, and stay focused on every trading day by focusing on trading plan rules, because trading plan and your rules are your daily guide to your trading success. And if you're not able to follow it, then of course goodbye and find another job somewhere here out there. So thanks for watching. Hopefully this video makes sense. It's helpful for your own trading, and if you have any questions, let me know and I will help you out. Take care and we catch up soon.